Have you ever stared at your investment dashboard, finger hovering over the sell button, wondering, is now the time to cash out? That's exactly where I find myself today, holding Tesla shares and facing one of the toughest decisions any investor can make. So join me as I walk through the facts, the risks, and the emotions, and try to answer the big question. Should I sell my Tesla shares right now, or hold for the long haul? If you've been in the Tesla game for a while, you already know it's not a stock for the faint of heart. From jaw-dropping rallies to sudden pullbacks, Tesla's stock has taken investors on a ride that's been just as thrilling, and sometimes just as terrifying, as a rocket launch from SpaceX. It's a tech innovator, an energy disruptor. It's a cultural icon led by Elon Musk, a CEO who can move the stock price with a single tweet. Yes, there's been strong revenue and vehicle delivery growth. But at the same time, margins are tightening and profitability is under watch. When investors are optimistic about the future of autonomous driving or AI robotics, Tesla rallies. When doubts creep in, whether it's about Elon Musk's leadership or missed delivery targets, the stock can take a hit. Sentiment is fragile, and the current market seems increasingly cautious. Overexposure to a single stock, no matter how revolutionary the company, can increase portfolio risk. Others urge caution, citing valuation concerns and competitive threats. Ultimately, there's no one-size-fits-all answer. It depends on your strategy, your needs, and your confidence in Tesla's ability to execute. Sometimes trimming your position and reallocating to other assets is just smart investing. I'm not rushing into any decisions, but I'm also not ignoring the signs. Selling doesn't mean giving up on the company. Sometimes locking in profits or reducing risk is just smart portfolio management. And holding doesn't mean blind loyalty. It means having conviction and a long-term vision. Production issues, such as the ongoing delays with the Cybertruck and the high cost of building new gigafactories, add further uncertainty. It's about aligning the decision with personal investment goals. Are you investing for retirement 15 years from now? Or are you hoping to take profits in the next 6 months? If you're a long-term investor, Tesla's vision for AI robotics and energy may justify riding out the turbulence. But if you're short on cash or simply want to lock in gains, selling a portion of your holdings might not be a bad idea either. Drop your thoughts in the comments. I genuinely want to hear what you think. Stay tuned. And if this helped you think through your own investment strategy, give it a thumbs up and subscribe for more stock market deep dives and honest investing talk. And while the company continues to innovate, questions remain about whether those innovations will translate to sustainable profits in the near term. The company has transformed the electric vehicle landscape, pioneered advances in battery tech, and made clean energy cool again. The EV space is no longer Tesla's playground alone. Major automakers like Ford, GM, Toyota, BMW, and even startups like Rivian and Lucid are making aggressive moves. If you're someone who loses sleep over daily fluctuations or panics during red days, it might make sense to rebalance your portfolio and reduce exposure. On the flip side, if you're confident in Tesla's long-term roadmap, from full self-driving to humanoid robots, holding on could pay off big in the future. Many governments are pushing for EV adoption, which is good for the industry, but it also means that Tesla's market dominance is under pressure. Can it maintain its lead, or will the pie be divided among more players? As investors, it's easy to fall in love with Tesla's mission, but emotional attachment can cloud rational judgment. Whether you bought in early or joined during the hype, chances are you're wondering, is it time to take profits? Inflation is sticky, interest rates are high, and geopolitical tensions are affecting global trade. Tech stocks, including Tesla, are especially sensitive to these macroeconomic headwinds. And Tesla's own stock has shown considerable volatility, reacting sharply to earnings reports, delivery numbers, and even Elon Musk's side ventures. Or is there still more upside ahead? Let's start with what makes this decision so hard. Tesla isn't just another car company. Right now, market conditions are more complex than ever. One major concern on every investor's mind is competition. Tesla's recent earnings have been a mixed bag. Investor sentiment is another wild card. Tesla's stock is heavily driven by perception, so what am I, and many others, really asking? It's not just about Tesla's numbers. Another factor is risk tolerance. Tesla is a high beta stock, which means it moves more than the market. Also consider diversification. Are your Tesla shares a small part of a diversified portfolio? Or are they 50% of your holdings? Experts are divided. Some analysts believe Tesla could still double over the next few years if their autonomous driving tech, Optimus robot, and energy division take off. So here's where I stand. I'm taking a hard look at my personal goals, the market conditions, and Tesla's evolving business model. Let's recap. Tesla is still a dominant force in the EV and tech landscape. The stock is volatile and faces macroeconomic and competitive pressures. Your decision to sell or hold should align with your investment goals, time horizon, and risk appetite. So, what would you do in my position? Sell now and secure profits? Or hold on and trust in Tesla's future? Thanks for watching, and I'll see you in the next video, where we all explore whether NVIDIA is the next trillion-dollar stock in the making.